how are you trading this things? I've heard you. Yeah. I've heard some pretty spectacular sayings.
I have said this before, and this may be what you're referring to. And a lot of people think I'm just kind of being hyperbolic or trying to get attention or whatever. But I've said it's the biggest trade in history.
Hi, this is Mike Maloney, and I've got a special guest with me, Brent Johnson. He's got the dollar milkshake theory, and we've had a lot of people asking about this. And I'm probably one of the only guys in the precious metals sector that absolutely agrees with everything that Brent Johnson has to say. So, Brent, how are you?
I'm good. Thank you for having me. I've been looking forward to talking to you, so this should be fun.
Yeah. You and I are on the same side on this thing. Now, I came to these conclusions because I just believe that we're going to have a big deflation, but the dollar milkshake theory goes right along with everything I was saying. As far it's for people in the United States, for the dollar to go up in purchasing power abroad, which you're talking about exchange rates changing,
right?
That's deflationary for all the products that we import, right?
That's right. That's right. And it should, a lot of people talk about how we need a weak currency to get out of this, but strong currency can help you get out of it as well. Strong currency is better for the middle class than a weak currency.
For our viewers that aren't familiar with you, can you tell us what the dollar milkshake theory is and how you came up with it?
Sure. So my name is Brent Johnson. I have a wealth management firm called Santiago Capital in San Francisco. And as part of my wealth management practice, I do a lot of macro work. So I'm not just somebody who goes out and buys, a 60-40 portfolio of U.S. stocks and bonds. And I've always had a very keen interest in the big global macro picture. I'm a huge believer in gold. I think gold should be in everybody's portfolio. And to be honest, it was a lot of my work in gold that led me to the dollar milkshake theory. I was like many other people after the global financial crisis in 2008 and 9. I felt that gold was going to do very well, and it did for the first couple of years. QE1 was very good for gold. QE2 and 3 were not very good for gold. And while we were going through QE2 and QE3 and, kind of the 2012 to 2014 timeframe, I was thinking to myself, they're printing all this currency, the dollar should be losing value and gold should be going through the roof, and it wasn't. Now, you can make a lot of arguments of why it wasn't or why it was or why it wasn't, but the bottom line is that it wasn't doing what I thought it was supposed to be doing. And so I felt like I had missed something. And so I kind of did a really big deep dive back on my whole thesis for owning gold in the first place. And what I figured out was that the gold thesis still made a lot of sense, but that it might not pay off in dollar terms as soon as it would pay off in other currencies. And the reason is because the dollar, for many reasons, as many flaws as it has, is better or more preferable or just going to be the global reserve currency longer than these other currencies are. So I understand all the flaws of the dollar. I understand all the reasons that people don't like the dollar. I always ask them to find me another currency that doesn't have those same flaws. And it's hard to find another fiat currency that doesn't have those same flaws. And so on a relative basis to the other fiat currencies, I think the dollar is going to rise significantly. And I think as we get further into what I think is going to be a currency crisis, I think people from around the world, for a number of reasons, which we can talk about if you want, will choose to put their capital into the U.S. and the U.S. dollar as a relative safe haven. Now, again, not because the dollar is great, but just because it's better than the other choices. And I think when that happens, it'll push the dollar higher. It'll push U.S. dollar asset prices higher. It'll be deflationary for the rest of the world. And, it'll eventually, I think that we will have a spiking dollar, which will then, it will either crash or it will be devalued, or it will, global, conference, they'll come together and devalue the dollar and maybe introduce a new system. But I think before we get to this, period where the dollar falls, we go through this big spike first. And that's the milkshake theory. Essentially that the rest of the world, the U.S. and the rest of the world is going to print all this liquidity, but the U.S. is going to suck it up.
Yeah, I believe absolutely the same thing. And we have better markets and we've got better interest rates. We don't have negative interest rates and all
That's
those
right.
things beyond. So your theory revolves around all of the international debt that's denominated in U.S.
Right.
dollars, correct?
That's correct. And so a lot of times, especially in the gold world, people will say, look at all that debt, that's horrible for the dollar. And in the long term, they're absolutely right. It is bad in the long term. But in the short term, until there is a new system that everybody agrees to go to, the debt is actually demand for the underlying currency. And there's more dollar demand around the world in the form of debt than any other currency. And it's not just US dollar debt within the United States. There's, trillions, at least 13 trillion. And, you can actually argue that it's much higher than 13 trillion issued by entities outside the United States that owe US dollars. So that's demand for dollars. It's demand on an annual basis just to pay the service charges. And then as they come due, it's demand to pay off that principal. And, so that demand for dollars, it's just kind of an ongoing and ever present, and it continues to grow larger. All the policies and procedures and the bailouts and the packages and the government this and the government that have been put in place since 2008 and 9, all they've done is kick the problem down the road. They haven't solved it. And again, just since March, all the bailouts and the proposals and the stimulus, they've just made the problem bigger. Even with the swap lines that we've extended to other countries, it's just made the problem bigger. It's increased the actual size of the demand for dollars. And again, if the whole world were to decide en masse that we are going to leave the dollar and we're all going to go to gold or silver or euros or yen, then the dollar would be in big trouble. But when they do it just piecemeal a little bit one by one, there's not enough firepower to kind of take on the overall system. And the system, as it gets bigger, it just kind of reinforces itself. And so that's why I say, they can push this down the road, but they have done nothing to solve it.
Yeah, you said that the dollar was the best one out of all of those currencies. Max Kaiser used to say, the dollar is the leper with the most fingers left.
That's a good one. I might have to steal that one. That's a good one.
But you're a big believer in gold too, and
absolutely.
The dollar milkshake theory. The dollar can be going up and falling against gold if other currencies are falling faster than the dollar. Correct?
That's correct. And so I've been saying since 2016 or 17 that we will eventually get into a period where the dollar and gold are rising together. And a lot of people would say, that's not possible. They're total antithesis of each other. Well, it is if you just compare those two. But if you look at the full world of fiat currencies and other assets, there's no reason that the dollar and gold can't rise together versus everything else. Now, maybe gold outpaces the dollar, maybe dollar outpaces gold a little bit, but versus everything else, I think those are two of the most important assets to own over the next couple of years.
I've been saying that the dollar and gold, there will come a time where they rise together. Not for the same reasons, but I've been saying that for more than 5 years. Do you think that we are sort of nearing an end game with all of the crises and stimulus and all this stuff that you're seeing happening? Doug Casey once said, things will happen very slowly until the day they don't. And then they happen real fast.
That's a very good way to say it. I do think we're getting closer to it. Interestingly, I think it can actually take a few more years to play out. And a lot of people I talk to say, oh, how is this not going to end in the next 6 to 12 months? And I understand that idea because, things are kind of crazy and they seem to be speeding up towards the crazy. But things were pretty crazy in 2009 as well, right? And things were pretty crazy in 2011 and things were pretty crazy in 2014. And it's pretty miraculous that the central bankers and the monetary authorities can keep the plates spinning as long as they have.
Yeah.
But from a Machiavellian perspective, you kind of have to give them credit. They've been able to do it. Again, I don't like it. I don't like these policies that they've put in place. But if I just step back and analyze it, they've been able to keep the plates spinning. And so I think maybe it's possible it lasts another couple years. But you kind of have to be prepared for it to end next week as well.
Well, the Federal Reserve seems to have this impression that the stock market is the economy. And when the stock markets go up, it fools the public into thinking the economy is doing well. So they've got this mandate sort of making sure that the markets go up. And as long as the markets go up, that will also be one of the factors that attract foreign capital, being exchanged for dollars, pushing the dollar up to invest in the U.S. markets. Because if other markets aren't doing as well, if the place to be is the U.S. stock market, then along with that's part of sort of coincides or feeds into the dollar milkshake theory then, right?
Yeah,
That,
that's right. And, when I've always, throughout my whole career, I've always worked with individuals. I've never been on, where I had clients where there were institutions and professional investors. So I've always, had to try to figure out some of these complex things that take place in the financial world, but explain them in a way that, an individual that's a software designer, or maybe they have a manufacturing business, or maybe they have a trucking business. They're very smart, they're very successful, but they're just not used to the lingo or the intricacies of, somebody who works in finance day in and day out. So I've always had to try to figure out analogies and ways to explain it in terms that they could understand. And to tell a story in a way that it understands, you kind of need to tell it in a linear fashion. Chapter 1, chapter 2, chapter 3. But the reality is financial markets are very complex. I am under no illusion that I'm going to get this exactly correct and things are going to progress in the exact way that I've laid them out. So I've talked about some things that'll happen, and I kind of see them as a progression, but I'm not convinced they happen in the exact order that I lay them out in order to tell the story, if that makes sense. And so, whether the dollar goes higher first, or whether gold goes higher first, or whether, stocks pull back and then they go higher, I don't know exactly how things are going to play out. I have a thesis and a groundwork and a framework from how I think the world's going to develop over the next couple of years. And I've seen nothing to kind of dissuade me yet from that thesis, but I certainly don't have a crystal ball, and I'm certainly not going to sit here and say I can predict exactly how this is going to go. A lot of the reason that I have maybe pounded the table as hard as I have on the dollar is because I am such a big believer in gold, and I'm not somebody who's saying the dollar is going to go higher because I want gold to go lower. Part of the reason I've been trying to explain why the dollar could go higher is so that the people who own gold are ready for it if it happens. I don't want people to get knocked out of their gold positions because I think gold's going to save people long term. But what I had been saying for a couple of years is if we get into a situation where the dollar spikes, gold will probably get sold in the very short term to fund whatever liquidity needs they have. And that's exactly what we saw in March. In March, we got into a liquidity squeeze. It was a panic, for lack of a better word. Everybody needed dollars. People in the U.S. needed dollars, and people outside the U.S. needed dollars. So they sold everything. They sold stocks, they sold commodities, they sold government bonds, and they sold gold. Gold pulled back, I think, $100 or $150 in March. The miners went down 50% in March. Now, both gold and the miners have recovered faster than anything, and now they're back near their highs. But my point is that people may want gold, but they don't have to have gold. But many people and organizations who operate on the world stage, they have to have dollars. They might not want dollars, but they have to have them to operate. And so if you get into a situation where you sell what you have to, not what you want to, it's possible that gold gets sold along with that. And whether that happens again in the future, I don't know. I think the dollar is going to go a lot higher. So I think there will be periods of time where the dollar or where gold potentially sells off for short periods of time. But I think when that happens, it's going to be a buying opportunity because I do think at the end of all this, gold is the last man standing and gold is probably the main asset that you want to own.
Yeah. You talked about the pullback and getting liquid, people just needing to raise capital that happened in March. Silver took a much bigger hit than gold.
Yeah. And subsequently, it's up 45 or 50% since that pullback. Exactly. So once markets get reliquefied, it's gold, silver, the miners, precious metals, they are going to be very attractive assets. But in a fire sale, that's what they're for. And this is the other thing too, is part of the reason you buy gold and silver is that if you get into a crisis, you have something to use. And you know what? We were in a mini crisis in March, and some people had to use their insurance policy, right? It helped them bridge that gap. Now, hopefully, they've been able to get back in and buy some of it before it went all the way up. But again, especially for people around the world, gold has been doing for the last several years. A lot of people in the U.S. have said gold hasn't been working, but I think gold's done exactly what it's supposed to do for the last 5 or 10 years. The crisis wasn't in the U.S. yet, so it didn't need to go up in dollar terms. But for people in Venezuela who owned gold, it did exactly what it was supposed to do. For people in Russia who owned gold, it did exactly what it was supposed to do. People in Cyprus or Argentina, it did exactly what it was supposed to do. And eventually that will happen to the U.S. and gold will do exactly what it's supposed to do in dollar terms as well. I just think that takes a little bit longer to happen.
In almost every currency on the planet right now, the majority of the currencies, gold is setting record highs.
Absolutely.
The dollar is one of the few ways you can measure gold where it's not setting record highs. But it's still, if you look at where gold was in the year 2000, I look at what it's done this century simply because this is part of a bigger cycle of this, stocks having their day in the sun, which really happened from 82 to the blow off top of the NASDAQ in 2000. And then gold and silver are in their cycle right now, and we're in the mid-cycle pullback, the mid-cycle correction, the same thing that happened from 1974 to 76. There was a huge correction in the middle of that secular bull market. There was a cyclical pullback, and I really believe that we're just in this giant version of that. So how are you trading this things? I've heard you. I've heard some pretty spectacular sayings. Tell us how you're trading this and what you call it.
Well, are you talking just on gold here, or are you talking on everything?
Trading the dollar milkshake theory.
Yeah. Okay. So I have said this before, and this may be what you're referring to. And a lot of people think I'm just kind of being hyperbolic or trying to get attention or whatever. But I've said it's the biggest trade in history. And I am kind of joking around a little bit, but I also mean it. And so what I mean by that is if you look at all the dollar debt in the world, it is the biggest financial position in the world. If you take on debt, if you borrow something, the idea is that you're going to pay that back at a lower price someday. Whatever you're buying is going to go up versus your borrowings, and it makes it easier to pay off. So a lot of people around the world, US and non-US, have borrowed all this money in dollars, and they've established the biggest dollar short position, for lack of a better word. And when you short something, you're borrowing it, and then you have to pay it back later. And the idea is that whatever you buy goes up, and it's easier to pay back. Well, all this debt has been taken out over the last 10 to 20 years, but the prices of which they paid, they have not gone up in value. The economy has, stalled and is starting to fall. And in foreign currency terms, the dollar has gotten stronger. So they thought they were going to borrow in dollars and pay it off in the future when the dollar went down in value. But instead, the dollar went up in value. So not only do they owe what they borrowed, but it's gotten more expensive for them. So they have this short position they have to get out underneath. And so I think that there's going to be a short squeeze on the dollar. And I think that's going to push the dollar to higher than many people think possible. So the way I'm trading it is I'm keeping cash on the sidelines. I was long U.S. equities because I thought U.S. equities would go up. We were hedged at the beginning of the year, and we did really well through the downturn. We got aggressive at the bottom and bought the bottom in March, but I got a little too cute and I hedged everything again in May. And so, I've lost money over the last month, even though the market has continued higher, and that's kind of frustrating. But what I think is going to happen is, I think over the next couple years, most assets outside the United States are going to come under extreme pressure. So we have a number of short positions, meaning we're betting that prices around the world are going to fall, foreign currencies are going to fall, foreign stock markets are going to fall, emerging market bonds, some international market bonds will fall as those governments are not able to meet their demands. And then so that's what we're doing on the short side. On the long side, we've got short-term fixed income, U.S. fixed income. Basically, think on a relative basis, U.S. fixed income will do better than emerging market and international. And then we do have exposure to U.S. stocks. Again, they're hedged right now because I think there'll probably be another pullback before we run to all-time highs. But I think in the next couple of years, U.S. stocks will go to their all-time high. And I think valuations will become even more extreme than they are now. Not because things are good, but because things are bad and people are fleeing to U.S. large blue chip equities as a relative store of value. And I think that happens because I think people will start to sell foreign bonds. And they may even start to sell U.S. treasuries at some point. And when assets start to flow out of the fixed income markets, which are much bigger than the equity markets, it's got to flow somewhere. Individuals like you or I, Mike, we can just sit in cash and go to the sidelines and not worry about it. But big institutions, the mutual fund managers, the endowments, the hedge funds, the pension funds, they can't just sell everything and go to cash. their mandate is to invest it somewhere. And I think when that happens, U.S. equities will be one of the places they go to. So I think we'll kind of have this big, spectacular blow off top in U.S. equities over the next couple of years, and then it will all reverse. Then I think U.S. equities will go down, and foreign equities and emerging markets will start to rise out of it. So that's kind of a big, broad paintbrush, but that's largely how I see things playing out. And I think over the next couple of years, gold and silver will do very well. And then I think when the U.S. dollar starts to fall,
they have done very well though. This century, when when I measure them against the Nasdaq, the Dow, the S&P, bonds, the number one asset, with the exception of a few cryptocurrencies, the number one asset this century has been gold and silver, and it's been by a long shot. I mean, you go to stock charts and generate a performance chart that's comparing different asset classes from the year 2000 to today. The markets are up like 100%, but gold is up 500%.
Absolutely. There's really no good reason not to own gold if you're a long-term investor. If you're a short-term trader, I can understand gold's had a big run up here in the last 6 to 9 months. Maybe we're going to get some short-term weakness, but if you're actually creating a portfolio that's got a 3, 5, 10-year time horizon, and you want a portion of it in something that's kind of anti-fragile, for lack of a better word, that can survive in all different types of environments, there's really no reason not to have some gold in there. And I think, again, I think gold's going to $5,000. It's funny because I come on and I tell everybody that I think gold's going to $5,000. I tell everybody they should own it in their portfolio. But if I say that it's not going to happen in the next 2 or 3 days, then people think that I'm a gold bear. And I'm really not. I just acknowledge that it's possible that gold goes down from time to time. Again, I think I own gold. I think everybody should own gold. I think gold's going to $5,000. Just be prepared if it doesn't happen tomorrow.
Yeah. So you think that this is, because it's one of the biggest trades ever, this financial event that you're talking about, do you think this is the last great opportunity for a huge trade? And I've heard somebody said, maybe you called it or somebody else called it, trading Armageddon. Yeah.
Well, but the thing is there's two sides to this trade. I do think this is the biggest trade that we've seen in history. I mean, I just think it's massive. And if we get it even a little bit right, the potential to make money is incredible. And I'm kind of an atheist when it comes to make money. I don't care if I make it on gold, silver, bonds, stocks. My goal is my job is to make a profit for my clients. So that's my number one goal. I would like to do it in a fashion in which I like, but if I have to do it in a fashion which I don't like, well, then so be it. But even though I think this is the biggest trade over the next 2 to 3 years, and I think it is the biggest trade we've ever seen, the trade after that's going to be just as big, because that's going to be doing the exact opposite. So if the dollar runs up to, I've said it's going to go back to its all-time highs in the 150s. If it ends up being 140 or 160 or 137, I don't really care. But once it has that big run up, it's going to go the other way.
Yeah.
And I think after it's had that big run up, and if you look at the chart of any short squeeze, it always goes parabolic and it always goes higher than anybody think is possible. But it doesn't last. And as soon as it stops going, it crashes. And I think that's largely what's going to happen to the dollar. I think we're going to get into this tremendous short squeeze. It's going to go higher than many people think possible, but then it's going to go the other way. And I think the key, and listen, I don't know if I'm going to get this right or not. I'm going to try to get it right, is that if I can sell the dollars and the long dollar positions we have when we're in the middle of that or towards the end of that big spike, and then I can use those proceeds to go buy, the distressed assets, the non-dollar distressed assets, then when the dollar starts to fall, then those should start to rise. So in many ways, this is a setup for the next big trade. Mm-hmm. But I just feel like the opportunity over the next 2 or 3 years, it's big enough that it's worth taking a shot at. Now, I don't think somebody should put 100% of their portfolio into the long dollar trade. But the asymmetry of some of the trades that we're doing are such that it makes sense to allocate. If you have a percent of your portfolio, let's say 5 or 10%, that you use for more speculative plays, then I think it's a great opportunity, because I don't think a lot of people expect it to happen. And when something happens that people don't expect to happen, the payoff tends to be pretty good.
Well, I hope that it pushes gold down a little bit when the dollar rises, because I like the opportunity to accumulate it. I still think that gold and silver are incredibly undervalued. But I do think that when the dollar is running up toward those big highs that you're talking about, just like back when the stock market crashed back in 2008, gold went down with it for the first
Yep.
couple of months. Then it
Right.
turned around, took off like a rocket, and the markets kept on crashing. I
Absolutely.
think
And
gold will crash a little bit as the dollar is rising, but then it's going to turn around and rise with the dollar.
I
So
agree
for
with you
me,
100%.
I continue just to accumulate gold because I think you're probably a lot smarter than me when it comes to trading. You know, you're more informed. You're watching the dollar and watching all of these all the time. To me, it's a lot of work to watch all these things.
Yeah, yeah. No, it
And
is. It
I
is.
just came to the conclusion back in like 2002 that gold was sort of a sure thing over the
Yeah,
long run,
it
you know.
is. And
And
it
so I
is.
took
It is.
this long view, and I've been happy just staying there and accumulating. And
Yeah.
but yeah, okay. It's it's been wonderful talking with you. I want to thank you for explaining all of this to our audience. Can you tell them your website again and your
Sure. So, yep, so my website is santiagocapital.com. My email is brent@santiagocapital. I'm pretty active on Twitter. It's santiagoaufund.com, or I'm just Santiago AU Fund. You can email me, you can call me. I do get a lot of emails and a lot of calls. I try to return them to everybody. If I don't get back to you, feel free to call me again or email me again. I'll do my best to respond, but sometimes a few things do fall through the cracks. But I'm always happy to talk. I've been a fan of yours for a long time. I've watched all your stuff. I think you do a great job. I think everybody should own gold and silver, and I think eventually everybody who has listened to what you're saying and used at least a portion of their portfolio to do that will be glad that they did.
Thanks a lot. And
Absolutely. Happy to come back anytime.
okay, we'll see you next time. Thanks.
All right. Thanks.